Stocks are heading for another record close today. The only question now, how long can this rally last? Let's ask the Wharton School Professor of Finance, Jeremy Siegel, joining us once again. It's good to see you again. That is the question on everybody's mind. What's your answer?
Things are looking good. I mean, I think the trade agreement with Japan that now looks like it is going to be extended to the EU is about as good as the market had expected. And maybe that's going to ease things on Canada. I mean, why should Japan get a 15% tariff on its cars, and Canada, I think, is still at 25? I mean, there's now hope of a lowering of that. And we're beginning to see some clarity in here with these deals being made, and that's certainly bullish. And certainly, I mean, that keeps the momentum going, I think, in the stock market.
What about the valuation? I just had a conversation with Lauren Goodwin, and others have suggested this too. We're a little rich, to say the least. Growth is going to still slow as a result of the tariffs, even if they're less than what we originally thought. How do you square those?
Well, you know, we talk about 22 times forward, but what we have is the Mag 7, is in the 30s, and the other 493 stocks are around 19, which I think is a very reasonable estimate. So the question is AI going to continue to power the Mag 7? And Tesla is 130 times forward. I mean that's kind of like an option on all its AI. I mean, you were talking Dan Ives on all, that probably should be taken out of the others. And they're in their 30s. So, I mean, it's really not a market that I think on the whole is challenged. The only thing that's challenged is AI going to keep up at all. It looks like it is, but that's the only part of the market where I think you have valuations that are aligned with what I think is historical and justified norms.
Do you think more money is going to flow to the other areas that you mentioned that you think offer better value to investors?
Yeah, what we need to see is not just the AI producers earn so much money, but the AI users, which are, the non-tech stocks that can use AI to reduce their costs and increase their margins. I mean, that is what I'm waiting for. And I think that's what ignites small stocks. That's what ignites value stocks. Adoption has not been that rapid, and maybe tariffs are going to be the poke that is going to be used to say, hey, yeah, you guys got to get going on what can reduce costs. And I think that's one reason the market is beginning to look favorably on some of these sectors.
And you think earnings are going to be strong enough to justify where the market is right now?
Yeah, I do. I do think there's going to be a slowdown. Listen, I still think, 15% tariff, even if it's across the board, is going to bring about a bump of 1 to 2 points in inflation. But I think the Fed should absolutely look beyond it. I've been saying this for a long time. Our short-term rate should be in the 3s, not in the 4s. If we can get it down there, there's a lot of ways to get it down there. I think there's blue skies ahead.